Hello all. I am Lisa from InHR team. I welcome you all to Soffinger family. In this informative session we will understand the concept of tax models, importance of investment declaration, and how to declare the investments on HRMS portal and timelines for submission of documentation. Do you know that company has to deduct tax from employee salary?
Oh, that is surprising. Could you explain why?
As per government regulations, all companies are expected to calculate income tax on the salary that is paid to the employee, deduct this amount, and pay the deducted amount to government on a monthly basis. This deducted amount is also referred as TDS, tax deduction at source. As of now, there are two tax models available. Employee has to choose which tax model should be applied while calculating income tax.
I am hearing about tax model for the first time. Could you explain what these tax models?
Two taxation models are available. Model 1, that is the tax slabs without investment declaration. Model 2, that is tax slabs with investment declaration. As you can see, the taxation rate is higher in Model 2 as compared to Model 1.
Why would someone opt for Model 2? That is, agree to pay higher tax rates?
Well, to balance this discrepancy in different taxation rates, the government allows people opting for tax Model 2 to reduce their income tax liability if they invest some part of their income in specific expenses. For example, investing in PPF, donating money to recognized charities, purchasing a house, purchasing life insurance, medical insurance policies, and so on. All such expenses are called as tax-saving investments. Please note that this is required only if you choose Model 2 as tax model. The tax calculations for Model 2 take into consideration your tax-saving investments and calculate your tax liability accordingly. You need to share your plans for tax-saving investments by filling up investment declaration form on our HRMS portal.
Could you explain what is investment declaration?
In case you choose Model 2 as the taxation model, the company needs to understand your plans for tax-saving investments so that they can calculate your tax correctly. It will use your data collected via investment declaration form on HRMS portal.
So, when do I need to fill up this investment declaration?
Investment declaration must be done in the first month of every financial year, and in the first month when you join the organization.
What is a financial year?
Financial year is the period in which income from all sources is clubbed together for taxation purpose. Different countries follow different definition of financial year. India currently defines the financial year as the period between 1st April of a given year to 31st March of the following year. All income that you get during this period is to be added up to arrive at your gross income. Based on the income tax rules and tax model chosen, income tax is calculated.
What happens if I don't fill up the investment declaration form on HRMS portal?
If you choose Model 2 as your tax model, income tax will be applied at a higher rate as per Model 2. If you do not fill in investment declaration form, you will end up paying more income tax to the government. Please note that the deducted tax, that is TDS, is paid to the government on a monthly basis. Company cannot return this money back to you once it is transferred to the government.
How can I get back the excess money paid to the government?
You need to file your income tax returns, in which you will show that you have paid excess tax, and request the government to refund the excess tax back to you.
Oh, sounds messy.
Yes. It is a time-consuming process. It is easier to fill in the investment declaration in a timely manner to avoid all these hassles.
Interesting. Could you explain a bit more about tax-saving investments to reduce my tax liability?
Sure. You will now see the various sections of the Income Tax Act and the investment types in it. Maximum limit subjected is 1.5 lakh rupees. The only condition is the premium must be less than 10% of the sum assured. Investment done in PPF is eligible for deduction. Maximum limit is 1.5 lakh rupees in a financial year. Investments of up to 1.5 lakh rupees in the National Savings Certificate can earn the subscriber a tax rebate under Section 80C. Tuition fee paid can be claimed as eligible expense. Maximum limit is 1.5 lakh rupees. The principal portion of the EMI paid for the year is allowed as deduction under Section 80C. The maximum amount that can be claimed is up to 1.5 lakh rupees. You can claim a deduction of 25,000 rupees for self, spouse and dependent children. This can be claimed for the medical treatment of a dependent with disabilities or differently abled. Interest paid on your education loan during the year is allowed as a deduction from the total income. Contributions made to certain relief funds and charitable institutions can be claimed as a deduction. Interest portion of the EMI paid during the year on home loan is allowed as deduction from the taxable income. The deduction available is the least of the following amounts. A. Actual HRA received. B. 40% of basic salary plus DA. C. Actual rent paid less 10% of basic salary plus DA. The amount of deduction available to a disabled individual is 75,000 rupees. In case of 80% disability, the deduction is 1.25 lakh rupees.
How can I try out different options for investments?
Well, that is easy. We have a tax calculator available on our HRMS portal. You can download the tax calculator, fill in the salary details, and try out impact of different investments by changing the values for various types of investments. To access the tax calculator on HRMS, firstly log into HRMS. Click on Self-Service Portal. Click of HR Policies and Documents. Then click on Forms. And lastly click on Tax Calculator. You can see an Excel sheet is downloaded to your system. Let us understand the working of the tax calculator with an example. This is our tax calculator. I have opened the tab Monthly Salary Details and fill up the salary details. To ensure to take care of your increment amounts. If your increments are due in the month of Jan, then add your incremented salary amount from month of Jan till March. Now let us go the tab Tax Calculation. You can see your total tax is 1,09,841. Now let us add the tax saving investments in the sheet to reduce the income tax amount. I am adding the amount for house rent paid. Always ensure to check that the rent amount is reflecting in your HRA exemption. Now I am adding the amounts for EPF, PPF, amount spent on children's education, annual repayment on housing loan, NPS and lastly interest on housing loan. As you can notice, the total tax has reduced to 71,049 after adding the tax-saving investments. I hope now you understand the working of tax calculator, and you can wisely take your decisions while selecting the tax-saving investments.
Great, this looks easy now. And where do I fill in the tax model?
By default, your tax model reflects as new tax model. You can change your tax model To do so, log into HRMS. Then click on Self-Service Portal. Then click on Choose Tax Model. Screen reflecting New Tax Model as default.
You can change it to
Old Tax Model
on Submit. So, when do I need to complete tax model selection?
Tax model selection must be done in the first month of every financial year, and in the first month when you join the organization.
When I fill up the investment declaration, do I have to submit the proof of expenses for tax-saving investments immediately?
You do not have to immediately submit the proofs of expenses for items mentioned in your investment declaration. The company assumes that you will spend the money as mentioned in your investment declaration and deducts tax accordingly. However, as per government regulations, the company has to verify that expenses associated with tax-saving investments have actually been made within the given financial year. To handle this regulatory aspect, the company applies following criteria. In case you resign, you are expected to submit the proof of investments within 07 days from the date of your resignation. In all other cases, company expects you to submit proof of investments on or before 20th of January of the financial year.
What will happen if I do not submit the proofs for investments as per the investment declaration form?
If you fail to submit the proofs of investment for the specified deadline, the company will be forced to nullify your investment declaration and calculate income tax with zero investment declaration. Deduct applicable tax from your monthly salary and pay it out to government. Please note that value of income tax remains fixed for a financial year. By proper planning, you will pay the income tax uniformly across the 12 months. In case you fail to provide proofs for tax-saving investments, then the original payable tax will be recovered in only 3 months: Jan, February, and March. This could lead to substantial reduction in your take-home salary. So, make proper decisions about both choice of tax model and choice of tax-saving investments, and submit proofs of these tax-saving investments on time as defined by the company.
Oh. Would I get penalized for not submitting proofs, even after actually incurring the expense?
Yes, unfortunately. If you choose Tax Model 2, it is your responsibility to fulfill the commitments you have made in investment declaration, and also submit the proofs to company within the specified deadline. Any excess tax that has been deducted and paid to government has to be claimed back from the government by filing the income tax return. I hope that you have understood the concepts, application and implementation of income tax models, process, documentation and timelines for completing critical components of investment declaration. Quick recap. Before you choose your tax model, it is recommended that you use Tax Calculator and then decide your option. In case you still have confusion about this, please speak with your chartered accountant for better clarity. Once you select income tax model, you cannot change it for the current financial year. So be careful while selecting the tax model. In case you have income from other business profession, then you can opt for Tax Model 2 only. Investment declaration is to be made only if you opt for Tax Model 2. Tax once deducted cannot be refunded by the company. You need to file income tax return and claim the money back from the government. I hope the concepts are clear to you.
Yes.